Welcome to today's webinar, which is our private equity debate for the Northern region. In the webinar, we're going to take a look at the private equity market for 2020, and we're also going to discuss how we see 2021. For those of you that don't know me, my name is Phil Scott, Director at FD Recruit, and I'm delighted to be joined by three expert panelists who are going to be sharing their knowledge of working within the PE sector. The running order for today, we're going to go through a main set of questions, and then we will open up after we've gone through the first amount of questions for some participant Q&A. If you do want to submit any questions, please put them in the chat box. I think Zoom does send you an email telling you to email the questions through, but we are just locked into the Zoom format, so we haven't got access to any inboxes. So once again, put any questions in the chat box and we'll cover them as we approach the end of the session. So I'd like to make some introductions. We'll start with Liam May. Now, Liam's director at NorthEdge Capital. He started his career at EY in corporate finance. Then he moved on to Altium, NVM, and then over to NorthEdge. So he combines his current role in private equity and has done so for a good number of years alongside several NED appointments. So let's just go over to Liam. Just tell us a little bit about what's happening in your world at the moment.
Thanks, Phil. I think speak for everyone in private equity at the moment. We're incredibly busy, seeing sort of lots of opportunities. I'm sure we'll come on to some of the drivers for why that is. Lots going on with the portfolio. Feels like we've weathered the storm. Again, I'm sure it's a topic we'll come back to, but plenty going on yet for sure. Thanks,
Liam. And over to Matthew Pomroy. Matthew is investment director at Foresight Group. Matt started in audit with CLB before moving into corporate finance at Mazars. He spent the last 4 to 5 years in PE and again combines this role alongside several NED positions. Matt, do you want to just give us a bit of an overview of what's happening with you at the minute?
Yeah, I'd echo Liam's comments there that things are really busy at the moment. Definitely picked up out the back end of sort of the summer and into Q4. And I think we're touching on a couple of topics later that the reasons for driving that, such as the potential capital gains tax changes and other items on the agenda. So yeah, I won't spoil the fun.
Great, thanks, Matt. And last but not least, Adam Keasey. Adam, director at Endless. Adam started at Yorkshire Bank, then moved into an advisory role at KPMG and has spent the last 7+ years at Endless. And Adam, do you want to just give us a quick overview? What's life like for you at the minute?
Probably like Liam and Matt. It's been pretty busy. Last few months have been, well, the busiest I've been at Endless the last 7 years. And I'm kind of hoping for that wind down to Christmas to happen, but it seems to be moving ever further away.
Yeah, I think there's a few people around waiting for a bit of a Christmas shutdown if we get it. So, Matt, I'm going to just come over to you, and I'm going to put the first question to you. Just tell everyone how your organisation has responded to COVID-19.
I think probably in a few phases actually, with the peaks and troughs of COVID over the last year. So I think in March we were pretty quick on the draw with supporting our portfolio companies and ensuring that they had the relevant, I suppose, teams in place and support in place to ensure that they were managing their cash appropriately. And obviously some businesses have experienced I suppose the highs and lows of COVID with a mixed portfolio like we have, that includes bar chains, coffee shops, restaurants, but also a number of e-commerce businesses as well that have, performed very well. So it has been mixed, but I think overall, Liam pointed out that, I think we've weathered the storm, and I think that's probably the right expression. I think is, we've probably not had to follow on as much as we may have thought we did at the initial outset. And as I said, a number of businesses have come out the back end of this stronger than we went into it.
And Liam, over to you. What's how NorthEdge responded to COVID-19?
Yeah, I think again, like Matt said, it's been phases. So I think initially it was providing that support. We appointed Deloitte to advise on sort of all things CBILS and furlough and make sure that we were sort of dotting I's and crossing T's in terms of in terms of making sure we are compliant, because I think there is an extra scrutiny that private equity backed businesses are placed under. I think once we'd managed through those cash dips, if there were any, and again, like Matt, we have a mixed portfolio, so a gym chain, for instance, a luxury travel business as well. I think it was then a case of actually standing back and saying, you guys have this, you don't need our sort of daily support. And there was a time when we did provide daily support, but I think as important as providing the support was stepping back and letting the executive team sort of crack on running their businesses.
And what sort of support would you have provided in the early days?
Well, as I say, we would have sort of a daily support, but also we would have forums on subjects where specialists from Deloitte would comment on, the specifics and really detailed advice around, employees joining or employees that were made redundant and then furlough came in. We want to make sure we're absolutely getting that right. And then also we had sort of forums where it was just our portfolio companies. So the CEOs of all the different portfolio companies could dial in and share best practice in terms of how they're approaching managing cash, how they're approaching taking C-bills and other government schemes. So it was providing that infrastructure and that support in the early days, but as Matt said, I think it showed how robust a lot of the private equity backed businesses are, because after that initial sort of that support, they really have cracked on themselves, and we wouldn't want to take too much credit for the guys sort of emerging from that.
And just to add to that, I think there was a lot of information coming out in very short space of time from the government on all the different schemes available. And I think one of the things, and I'm sure the guys did it as well, it was pulling all that information together and presenting it back to the portfolio in a way that they could understand it and they could take the bits that they required from it, and ensuring that everything that was available to the portfolio company was they were able to reach out and get the advice on.
Thanks. And Adam, what have Endless been doing to support their portfolio?
I think it's been very similar to NorthEdge and Foresight, really. I think it's initially the hands-on daily support, and that was a key feature for us, probably from March to late May. And then as kind of things evolved, it's that point about what is key to that business and what kind of support was available. I think for us, we became ad hoc projects because some businesses didn't need our support at all, as the online retailers, etc. But others, it was constantly evolving. The lockdown, for example, in the construction industry, then every week you kind of reforecasting what does the rest of the year look like, what does that business need in terms of support. So I think I've never done so much forecasting with our businesses. I think every week's a different scenario and a different outcome. So
and across the whole, how's the portfolio coped then? I'm guessing you've had some sort of different results.
I think to echo Liam's point, it's been remarkably resilient, really. I think we kind of expected when in the dark days in early March, we were kind of expecting a big check to be written to kind of support the portfolio through the crisis. I think as of today, net support has been zero. Money's gone in on a short-term basis. It's kind of been repaid as things have unwound. But the key thing will be understanding how the government supports businesses next year and how that's kind of ongoing. If furlough changes or if kind of the VAT scheme is varied, there will have to be another kind of scheme of look at how we support our businesses.
Great. Matt, what activity levels have you seen then in the market in terms of investments?
I suppose, as I said at the beginning, I think things were quiet, and actually, we had the time to focus on the portfolio over the summer months. But I think back end of the summer and into sort of September, October, we're certainly seeing more opportunities from the advisors coming through, and the number of IMs coming across your desk. Initially with a view of just getting things done because they've been sat on their laurels, but as we said, a lot of businesses have performed actually very, very well, and therefore are coming to market off the back of some very, very good numbers. So I think the market has certainly picked up in the last couple of months, and I've just done a sort of count as to, bearing in mind this is across our team and across various different funds, but we've currently got 18 new deals exclusive at the moment that we're trying to complete over the next couple of months. So I think, back to Adam's comment of the busiest he's ever been at Endless, I think it's very similar for our team as well. And I think that's certain funds have certain deployment targets. Those deployment targets don't go away, particularly when you manage things like VCT funds, like we do. And we've got to hit those targets. So it's great to see that the number of opportunities coming through.
Right, and Liam, what sort of activity levels have you guys seen?
It's as busy as I can remember for the last 8 weeks, and I think it's difficult to distinguish whether that's sort of CGT driven, and we'll come back to that. And also, I think the timing is for a lot of advisors, it's right. We can demonstrate that this business has traded well through COVID, or if it's a business which has suffered through COVID, it's proved resilient. And I think that is a word that is a theme of 2020. The resilient businesses have traded through, and then they're presenting them to market, and they're providing an explanation. And we're all seeing COVID adjusted EBITDA numbers up and down, for the e-commerce businesses going up, and for other businesses perhaps adjusting down. So yeah, we're seeing lots of new opportunities, and I think we'll see plenty more in January as well.
What type of opportunities are you seeing then at the minute? Is there a particular trend, or?
Yeah, I mean, it's no coincidence that I think 5 of the last 6 deals we've done have been in e-commerce or software. So we are seeing a lot of businesses. All businesses these days are technology businesses to some extent. You've got to have a technology backbone through your business. But we have as a house, although we are a generalist, have focused on software investments. And a recent deal we did, Lights of Fun, that's an e-commerce platform. So there is definitely a theme, but that's not to say we would discount any other industries.
Adam, over to you. What sort of investments have Endless been sort of getting into?
I think surprising for us is the wave of distressed deals that everybody's kind of anticipating hasn't come through yet. I think, and that's kind of the government support continuing. So what we've seen a lot of this year is non-core disposals from large corporates. I think running theme for us has been corporates trying to clean up or restructure their own businesses to make them a better strategic fit. So for us, we've been looking at things such as the Amscan deal we did last week out of the Party City in the US. That is a business that wanted to focus on US operations. So we had the opportunity to look at its other global its global operations and take that in-house.
How would you say the levels have compared?
I think in terms of non-core opportunities, it's been the highest I've ever seen. Usually it's kind of 2 or 3 a year we look at closely. This year it's been 2 or 3 a quarter, so it's been exceptionally busy.
Adam, just staying with you, would you say it's a buyer's market at the minute, or is everyone chasing the same sort of sexy type deals?
I think Liam's comment, if it's got a tech angle to it or an online retail angle to it, multiples are exceptionally high, and they were before COVID, and it's just accelerated that. I think for those businesses that have proved less resilient in COVID, or there's a bit of a question mark as to what's next for them, there's less of a run towards those businesses. So I think it's a game of two halves, really, Phil. It depends on if it's got that angle to it and everybody runs towards it. It's a competitive auction most of the time.
Yeah, and Matt, what is that your outlook on it? Is a few they're really going to auction?
Yeah, well, I think the interesting thing about COVID is it's not it's not stemmed from there's no financial recession that kicked all this off. The financial or slight financial dip is off the back of COVID, and therefore I think expectations from shareholders hasn't gone away on the value that they hold for their business. And also, as Adam said there, the assets that have performed well, and even the ones that Liam mentioned that have performed resiliently, and there's still going to be high demand for those. And it comes back to the fact that, we as, three houses here and others in the market are still sat on a lot of capital. So, it will continue to be a competitive market. And I think, as I say, part of the reason for that is it wasn't like an 08 recession where the value of businesses did just decrease sharply afterwards.
And how do you think, Matt, just staying with you, how do you think the economy will fare next year as a whole?
I suppose there's a lot of assumptions behind that. With the likes of everyone getting injected now, hopefully over the next few months, that will begin to have an effect, and hopefully there will be some normality returning in Q1 next year for all of us. You can see I'm still sat at home. It'd be nice to be sat back in Manchester and meeting up with the other guys for coffees and things, but we're not doing that, and that begins to initiate even more conversations and more transactions and things. So I'd like to think things will turn relatively quickly back to some form of normality. However, saying that, the deal flows that I've heard the guys talk about and that we've got is higher than it's ever been. So are we already back to that form of normality, albeit it doesn't feel like it because we're not out having a pint in the pub with everyone?
Yeah, fair enough. And Liam, what's your thoughts on the wider economy for 2021?
Okay, yeah, I mean, it's if I had a crystal ball, I'd certainly be using it, because it's, optimistically, we will get back to normal in sort of Q1, and all the events that have been delayed from last year in the wider society will start kicking back in again. But who knows? I mean, there could be another wave in February or March, and we're back down to lockdown. And what will the knock-on impacts of that be? That there may be industries which have managed to weather the storm, and that might finish a few of them off, and it might sort of be sort of held the beginning of a bit of a downturn or a recession, or glass half full. We're sort of getting back to normal, seeing good volumes at the moment. The combination of dry powder and the sort of Manchester private equity ecosystem will keep sort of chugging along, and we'll have a crack in 2021. But I think it's too early to say. I think that's probably the comment I would make. It's too early to say. I think by the end of probably February, March, early in the year, we'll have a better view.
Yeah, I mean, I was going to ask you, Liam, on your prediction for the PE market in 2021. I mean, how's everyone feeling at NorthEdge? Are they optimistic or pessimistic, or somewhere in the middle?
No, we're optimistic. We just closed our third fund, which is our main fund. We've got an SME fund that sits alongside of that, but we've closed our third main fund, seeing lots of activity to invest out of that fund. And as I just referenced just now, Manchester's got an incredible private equity and venture capital ecosystem. It's one of the best in Europe. And I think the amount of dry powder that is sort of knocking around, the amount of capital that people have to invest. Yes, they will be, in some instances, chasing after some of those assets which have sort of proved top decile. But I think the knock-on effect that'll be that businesses that might have otherwise struggled to raise capital will still be able to do so. So, no, we are optimistic. So, in terms of, I guess, wide society and what impact COVID will have, that's too early to say. But I think in terms of private equity investing next year, as Matt referenced earlier, everyone's got deployment targets. So I think that will be, people will be using their best endeavours to hit those targets.
Thanks. And Adam, so you're nodding away. Are you guys pretty optimistic for next year?
Yeah, we're the same as NorthEdge. We've just closed our fifth fund last few weeks, so we've got that target to get out the door next year. So that'll keep us busy. And I think the key thing for us is it's again, what does it look like in the next 6 months? Who knows? I think we are just chugging along as best we can. There will be opportunities out there, either in our kind of more traditional distress space, but also in those kind of quirkier deals that analysts always seem to end up with. So I think we see next year being reasons to be optimistic about being busy and hopefully hitting our deployment targets.
And Adam, just staying with you, do you think, are you expecting Brexit to have any impact at all?
I think it just becomes another adjustment in that long list of adjustments that has now emerged during 2020 to what is a business performing like. Is it COVID adjustment? Is it Brexit adjustment? What is driving a business's performance? That's the big question now. Because you've seen all the stock sat on the side of container ships and on ports. It's businesses have been bringing stuff forward. When does that unwind? That's the question we're kind of asking our portfolio businesses and what they're doing about their suppliers. Is that driving performance upwards, downwards? Who knows? It just becomes another question for management teams to answer during the first part of next year.
Thanks, Adam. And Matt, are you expecting Brexit to have much of an impact?
I think we'll continue to review every opportunity we see on its individual merits, and some will be affected by Brexit, some won't be, and we'll have to take that into consideration as and when we look at it. It's like COVID, some have been affected, some haven't. So I think it will come down to, from an investment point of view, every individual business is different. I think on the wider economy, it will have some form of impact, but again, it's too early to tell at the moment with the delays in negotiations over the last few days. We thought we'd have an answer by Sunday night, and we still haven't. So how long will that go on for? We don't know.
No, we never know. We never know with that one. And Matt, what about the rumoured changes to capital gains tax? Do you think, and this sort of entrepreneurs element, do you think that's going to increase the levels of owner managers wanting to sell, and would that present opportunity for PE? What's your general thoughts on that?
I think we've already seen that with a number of businesses and companies coming forward and being put to market by advisors saying we want to get a deal done before March or before the end of March because we don't know what's going to happen with CGT. If we are working with one of those teams, we'll do our best to try and get a deal done before the end of March. But who knows what will happen? To be honest, they slashed entrepreneurs relief in the last budget substantially, with the drop from 10 million to a 1 million allowance. So that was already had a big impact on people. Will they do something again with COVID hanging over government's heads in March? I'm not sure. But there's certainly been a flurry of opportunities brought to market over the last few weeks. I think if businesses aren't considering that now and haven't got something in the market now, it'll be very, very tight to get something done in 3 months. But I think we'll just have to watch this space, and as I'm sure the other guys will do, if people are worried about those impacts, we'll, as PE houses, try and work with the management teams and get things done as quickly as we possibly can.
Thanks, man. Liam, are you seeing that sort of that change anything, or pushing stuff in front of you because of that?
Yeah, and I think we would have. I think if people are conscious of that change coming at the end of March, any business which has got an advisor on board, they would have been having warming up conversations through November and December, and actually that they would be quite well progressed. I think, again, as Matt said, if someone's looking to do a deal quickly from a standing start in January, they might be disappointed. It will certainly they'll be cutting it fine. And in terms of how we're approaching that, I mean, clearly, if it's sort of an equity release style deal where owner managers or the management team are looking to realise capital for themselves, we are thoughtful on that, and we need to make sure that that's not an artificial sort of release that they wouldn't usually have envisaged or would fall too far outside the time frame they would have done so. And clearly, I think our threshold for those sorts of deals is slightly higher, where it's more maybe an owner looking to sell his business to his management team. That's the dynamic we're more comfortable with, and we would happily engage in that sort of process. And as Matt said, I think while we can't make any promises, we are, the deals that we have in exclusivity, we're driving hard to make sure that those deadlines are met. And I mean, who knows? There's no guarantee those rates will change, but they're certainly headed in one direction. So got some sympathy for people wanting to do those deals before April.
Okay, we've got a couple of questions before we take on questions from the audience. So just as a reminder, if anyone does want to put any questions to the panelists, use the chat box facility located at the bottom of your screen, and we'll open up to questions shortly. But just staying with you, Liam, I think each of you have said you've just closed off funds, etc. Now, I've no idea whether it's just your firms as a trio that have raised funds, but just in general, is there a lot of sort of liquidity out there for lower to mid markets?
There's a huge amount of liquidity, I would say. I mean, I looked at some stats probably 18 months ago, and that was an all-time high. And I think there's been raises that have continued to happen since then. So I don't have those stats to hand, but it wouldn't surprise me if we are again at an all-time high, especially given there was a sort of pause in deployment between sort of March and late summer. You've got, I think, the BVCA stats on Manchester being the largest private equity community outside of London and Europe shows that, I saw today, this morning, another private equity fund are opening their doors in Manchester, Bridges Ventures, which is sort of an impact specialist. So yeah, that's another sort of party to add into it. But I think there's upward of 50 private equity or venture capital investors. So yeah, it's hugely competitive for us. But I mean, I guess that's where we like it. We want to create that sort of thriving ecosystem, and we want to support that ecosystem through advisors and lawyers as well. So yeah, lots of dry powder, lots of capital to deploy, and more coming, I suspect.
Thanks, Liam. And Adam, your thoughts?
It's just as Liam says, I think there's a lot of dry powder out there and probably more to come. I think we raised during lockdown and investor appetite was exceptionally high. And the feedback was they are looking still to invest in the UK, like Brexit and COVID. So I wouldn't be surprised if we see a few more houses pop up in the north, both in Leeds and Manchester, and maybe even further afield. So
yeah. And Adam, what do you think PE houses will be looking for post-COVID?
I think it's the key word of today's conversation, probably resilience. It's understanding how the management team of that business have coped through COVID. What levers have they pulled to get themselves through, and in a lot of cases prosper? And will that be repeated post-COVID, kind of hopefully concluding at some point next year? And kind of to echo a few of the themes we discussed in terms of, is there a digital angle or an e-commerce angle to this business? Because there's still a lot of businesses that are bricks and mortar based. How are they going to transition over the next few years to a more digital economy?
Yeah, that makes sense. And Matt, what would you say on that one?
I think it comes back to the things that we look for pre-COVID. It's the strength of the management team. In the first instance, that's always key for us, and getting to know that management team. They're going to be the people that you're going to be working with for the next 3, 4, 5 years, however long it might be. So that's always got to come first. And then, I'd echo Adam's thoughts there on, resilience of the business and understanding what the real maintainable position of that business is with the potential upwards and downwards adjustments that might be applied over the last sort of 12 months or so. And also at the overall market and how that market has fared in the last 12 months particularly. Are we going to dive into a restaurant chain in the next couple of months? Possibly not, but you never know.
Okay, so thank you for that. I'm going to start looking at the questions from the audience. Just as a reminder, anyone that wants to put some questions to the panelists, use the chat box facility. To the panelists, if you fancy the questions, raise your hand and say, I'll take that. So the first question is regarding, this comes from Juan Franco. to regarding the software industry, how would you rank the following factors in order of priority when looking for potential investments? So number 1, historical results and/or cash generation. 2, innovative products. 3, management team. 4, other. So when you're investing in software, what's the sort of?
I'll go first. I'll just refer back to the last answer. I suppose I'd always look for management team first. You know, if you've got a rubbish management team, a great product, it's not going to work. But so look at management team, look at the product that the market that's in, and I'm looking at this from probably a sort of more growth capital investor as well. In the fact that, you know, it's not necessarily all about the historical cash flows of the business. So, you know, we will look at product, management, product, and then the finances. That could flip on its head if it was a buyout transaction. Obviously, we'd potentially look management, financials, and then product. But yeah,
makes sense. Liam, Adam, would you contradict any of that?
No, I mean, I would be reticent to rank them, but I would certainly say that you know, businesses which are technology focused, if they've reinvested their historical profits or cash flows into that, you know, into the R&D element of that business, that, you know, we wouldn't necessarily be overly concerned if the business was you know, what wasn't generating a huge amount of profit historically. I think we'd be keen to, you know, make sure the business has grown, to make sure, you know, there is an appetite. I think innovative product is, you know, almost a given. I think if it's not innovative, it's not going to be able to penetrate its target market. It doesn't need to be something completely new, but it needs to offer something to its customers that's not on the market. And then, as Matt said, you know, management team, we are all about management teams. So, you know, a really strong management team. And in terms of other, I'd say a really clear growth strategy, which is targeted. So there are lots of different opportunities that are presented to software businesses, you know, and it's about saying, right, here's 2 or 3 that we're really going to go after, and this is what we want support on. So I think that clarity of focus is something that we really look for as well.
Okay, so I'm going to jump to one of the other questions while we're on management teams. Question from Indy. What's your view on how management teams, in particular FDs, there's quite a few FDs tuning in today, what's your view on how they've performed during COVID? Obviously it's an unprecedented situation, but who wants that one?
I'll take that one then. Oh, go
on, Adam.
Adam.
I think the key thing for us, especially at the start of the crisis, it shone a light on the FDs that aren't all over their numbers, especially cash. When the question went out, can you give us a cash flow for the next 13 weeks and how's that look? The ones that took a while to pull that together were a concern. And it also shone a light on those that had their teams too stretched when they didn't have the resource to deal with different situations as they arose. So I think in terms of deficiencies or learnings, it's what does your team look like? Is it sufficient to get through any crisis, including Brexit, which is on the horizon? And are you in the details sufficiently? There's a lot of FDs that I've come across that are reliant on their team too much sometimes. And every question gets, oh, actually, this guy will answer that. You should know what your cash flow looks like, to be blunt.
Yeah, no, makes a lot of sense. And Liam, Matt, anything on those? Would you agree?
Yeah, I completely agree. I mean, we're biased. I think we're accountants. All 3 of us are accountants, so we natural affinity to our CFOs and FDs. But ownership of the numbers. But other than that, you know, across our portfolio, they've all done a stellar job and they've been absolute superheroes this year. So yeah, definitely deserve their Christmas break.
Yeah.
Okay, so I'm going to move it on to the next question. Thanks for your answers there. Outside of technology, are there any sectors that are particularly hot now? You know, that are more attractive now post-COVID? It says e.g. ESG focus, perhaps. Who wants that one?
Yeah, I'll take that. I'll take that one. We've had a historical, and you know, Gareth mentions ESG, and just to build on that, that is something that, you know, we've at NorthEdge had that pretty high up our agenda for since we were formed, really. And it's something that we look at quite closely. And I mentioned Bridges, they're an impact investor. So you are seeing funds pay a lot more attention to that. So it needs to be, you know, obviously it goes without saying, but it needs to be genuine. Sort of any superficial sort of CSR, ESG sort of veneer on staff will, you know, be able to peel that off pretty quickly. So for genuine businesses where they have got that that ESG sort of vein running through their business, we are keen on. In terms of other sectors, I think yeah, again, we are still a generalist, so you know, whether it's manufacturing or software, you know, all of those sectors we will continue to look at. But yeah, there is definitely a slight, or more than a slight, tendency to gravitate towards technology and software at the moment.
Thanks, Liam. They're the 3 questions that have come through. Guys, anything else to add? Anything you'd like to throw out there? Okay, well, that brings our session towards a close. A massive thank you to everyone that's signed up to this webinar. Thanks to you guys on the panel, Liam, Adam, and Matt. Yeah, I'd just like to wish everyone a happy Christmas, New Year, all that sort of thing. I think we're in mid-December. I'm allowed to do that now, but yeah, I do hope everyone's enjoyed this session. I do hope going into next year that you guys do get a chance to interact with FD Recruit or any of our group businesses in Exec Recruit Group. And I'd like to formally bring the session to a close. Thanks, everyone.
Thanks, Phil.
Thanks very much.
Cheers.
Thanks.